Hey, what's up, guys? John here. Some pretty crazy things right now are happening in the job market and labor market. A lot of people are talking about Meta stock. A lot of people seem somewhat optimistic about what's going on. But the more we look at this, I put together this presentation for you today. The more we look at this, the more we have to ask ourselves, how does this actually play out? Because this is absolutely insane. Like, this is crazy. So, most of what I'm going to show you has happened in the last 24 hours. And the rest is maybe 48 hours, right? So it's brand new information. So this happened today. Gap lays off 1,800 people. 1,800 people. This happened today. Dropbox lays off 500 people, about 16% of its workforce. This happened today. Lyft to cut 1,072 employees, or 26% of its workforce. Amazon closes Halo Health division. And Amazon starts layoffs in HR and cloud units. This is only just the beginning. And by the way, hit the like button if you want to share this video to educate more people about what's really going on in the economy. And if you want to fix your credit, maybe you want to do a balance transfer and get out of debt, which is going to be extremely important going forward to be debt free. Take advantage of the balance transfers now while you can. You need a 700 credit score usually to get approved. So if you have a credit score in the 500s, the low mid 600s, you want to fix your credit to do a balance transfer. You do not want to pay some other bank or institution 20% or 25% interest to borrow money. It's going to be a hard way to get debt free. And you can go to greatcreditfast.com or give us a call at 561-430-5900. $11.8 billion mistake. This is when Bed Bath & Beyond was doing buybacks, but now they're bankruptcy, right? They're stepping into bankruptcy. What is really happening here, right? Like, what is really going on? Sure, the economy's slowing down. Sure, there's a recession. Sure, people think maybe a depression is coming. But I think what we're actually seeing right now is a lot of these corporations pulling back big time out of America. That's what I think is going to happen. I believe they're going to start looking at the opportunities overseas, leaning more towards India, China, Brazil, many of these other areas. And they're going to do this because those countries are likely going to be flourishing with cheap natural resources, while America goes down in smoke. Unfortunately, if we just look at the information, if you look at the information, it's hard to deny it. So, and I'm going to get to that in a second. But just to close out jobs, April 2023, Tyson lays off 15% of senior leadership, 10% of corporate roles, 1,700 workers in March. 3M, they all lay off 2,500 manufacturing roles. Lyft, I already mentioned Lyft. Deloitte, Whole Foods lays off some people. Deloitte lays off 1,200. BuzzFeed lays off 15% of the workforce. David Bridal they're eliminating 9,236 jobs. That's absolutely insane. Walmart laying off 2,000 people. The retail giants cut more than 1,000 jobs in Texas alone. 600 in Pennsylvania, 400 in Florida, 200 in Jersey. McDonald's closing some. Meta, obviously. Accenture, Disney is laying off a lot of people. This is just the beginning. This is just the beginning. All these different companies. Yahoo cut 20% of its workforce. And you have to ask yourself, Dell cuts off 5% of its workforce. Why would all these large companies that have way better information than us, all we can do is basically look at the information that they provide to us every single day, right? They're actually seeing it. They're seeing their profit and loss statements every single day. They know likely what's going to be coming next. Why are all these large companies issuing layoffs? Because I believe that they're doing this because they know consumers in America are going to have less discretionary income and the cost of labor is way too much. And so they are pulling back to be able to weather the storm. Because even look at banks. Like, banks are telling their own story. Charles Schwab, being a big bank, has become a big problem with higher interest rates easily available elsewhere. The company is facing dwindling deposits. You heard about Apple issuing, I believe it was 4% just to put money with Apple, right? It's like, what are these banks offering? 0.25%? Unless you're going CDs, maybe you're in the mid 3s or low 4s. But a lot of people are moving money. They're moving money to try to get a better yield. A lot of them were buying T-bills, all of which are not good for banks. And as that is all happening, we look at other banks. First Republic, which I mentioned yesterday, but Popular Bank and Flushing Financial reports substantial profit declines. And they're going to continue likely increasing interest rates in the short term. Now, I know a lot of people are going to be like, no, they're not going to do it. They're going to pivot at the end of the year. People thought they were going to pivot 9 months ago, 8 months ago. People thought they were going to pivot in January. What happened, right? Like they keep moving the needle a little further, and people are still expecting a pivot to happen in the short term. I'm betting 25 basis points at this upcoming meeting, and probably another 25 thereafter at the next meeting. So if we just had First Republic Bank yesterday that stepped through this big problem, $100 billion you're talking about selling off assets, people pulled like $100 billion out of the banks. Like, if you have these types of scenarios occurring, and they're going to increase interest rates leading into that, you have to ask yourself, well, what happens next? Remember when Powell said that unless there's compelling evidence that inflation's slowing, that he's not going to stop hiking rates? Before, he said that he was going to hike rates until something breaks, right? This is 6 banks so far that have broken, and there's been very little to no media attention on this as being the caveat as to why we need to stop. What is ultimately happening is the Fed just simply said, the same person, the same body, the same entity that said that they are going to stop hiking rates if something breaks, said, no, we'll just, we'll put $2 trillion as a backstop and we'll stop that. That's not a big problem, right? So that's not big enough. And what I find very fascinating is America, we've had it so good for so long. As America starts to enter these questionable times, Argentina settled Chinese imports in yuan as China marches into South America to dethrone the dollar. So it's the most traded currency now, and it beat the dollar, right? So second largest country in South America is attempting to maintain its reserves in U.S. dollars after historical drought reduced exports by 15 billion. And China's push for greater use of currency in bilateral trade settlements has made further inroads in South America. Argentina set to follow Brazil and start to pay for Chinese imports in yuan rather than in dollars. Why do you think that is? It's because America is a country in which used to offer, now our currency is primarily backed by the military, but before it was backed by fossil fuels, it was backed by products, services. We offered something substantial to the world. Now it's a very expensive place to hire. It's a very litigious society based on expensive policy decisions going forward, such as everything that's doing with fuel and everything else, pulling back away from cheap energy. It's going to be a very expensive place for a business and a corporation to run a profitable enterprise. And so what I think is very likely happening here is all of this opportunity is being basically flooded east. That's what's going on. Everything's going to be flooded east. And, BRICS nations, and this is a good example. I mean, they just got bids from 19 other nations, 19 nations. And why the desire to move away from the dollar is getting real. And this is Bloomberg. There's de-dollarization different this time. Now, these 19 nations, when we look at some of these names, emerging, so obviously Brazil, Russia, India, China, South Africa will meet in Cape Town. But some of these other names are UAE, Algeria, Egypt, Bahrain, Indonesia, 2 other nations in East Africa, 1 in West Africa, Argentina, and they didn't identify the rest. I was looking at a bunch of different articles. They weren't telling you. But think about this. This transition that we're moving into in America, whether we like it, we don't like it, whatever our opinion is, I don't think our opinion really matters that much anyway if you look at everything that's happened. But it's going to cost $62 trillion is basically what they're saying the total cost will be. $62 trillion to do this transition, right? Of all dollars, they're saying, according to the Federal Reserve, there's about 2.3 trillion in circulation as of January. So what does this mean if the total cost could be $62 trillion? Now, it's not going to be up front, but even if they push it out over 100 years, even if they push it out over 50 years, right? How much money do they have to print? How do they get access to this? Because if we're not able to sell our debt to other countries because other countries are leaving the dollar, this could be a situation in which America enters a problem to the likes in which we've never seen before. And as that is occurring, Social Security is set to run out in the next 14 years. Now, I'm not saying this to be like doom and gloom guy, or some people want to inject emotion into facts. Facts are facts. This is what's going on, right? Like we're here to make money, to invest, to protect our family. That's what it comes down to, at least for me. Protecting, providing for my family, making smart decisions based on true, verifiable facts, and not, hoping and praying that something else is going to happen. Maybe it will, maybe it won't. But so far, it looks like this is what's going to happen. America is going to be entering a hyperinflationary period regardless, simply because if the cost of living rises so much, they're going to continue printing more and more and more money through like things such as universal basic income, subsidies, housing vouchers. They're going to start doing all of these different things. And as they do that, they're going to just continue to devalue our currency. And so, yeah, I personally think America is entering a challenging period. When I said before, oh, this will be worse than 2008, people are like, no, you're a fear monger trying to sell, video views or trying to get video views to make money. No, like, try to tell me anything else. If you can prove me wrong, I'll delete the video and I'll give you full credit. And and I'll do an apology video. But I would love to actually be proven wrong. Because at the end of the day, that's what I want. If somebody can prove me wrong, do it. Drop it below. Hit the like button. Subscribe right on my second channel. And if you need help fixing your credit, we would love to help you. We would love to help you. Right now, you think about this. If you are borrowing money from a credit card company paying 20% interest, and the cost in which you're spending on goods and services, car insurance, everything else, has increased 20, 30% over the last few years, think about that. You're paying 20 to 30% more plus 20 to 25% interest on a credit card. So unless your income has risen by 50% or more, 60%, 70%, then you're going to basically have to your lifestyle would remain the same based on that, simply just to offset all of those additional costs that you're in. We would love to help you get out of that with balance transfer. There's still a variety of different banks that are doing that right now. I think there's going to be a lot of distressed real estate coming. I really do. There's just no way. If you just look at the numbers, look at the fundamentals. There's like over 20 million housing units owned by mom and pop investors. Mom and pop investors, a lot of which are small business owners, they've been getting smacked the last couple of years. Like with all these policies, remember that like everything has been challenging for a small business owner with a brick and mortar the last few years compared to like a large corporation, right? Large corporations were expanding like wildfire. They were dominating. And who owns these small mom and pop units? It's going to be a lot of these small business owners. And what do they do when they're in a hard spot? They have to sell off assets, right? You need good credit to put yourself in a position to where you can grow your own business, scale your own business, maybe get business credit. You can do something. But if you want to get good credit, we'd love to help you. GregCreditFast.com. Call us at 561-430-5900 and add me on IG for short form content. Catch you guys later.